better than anybody expected. So he was basically one of the people that was tasked with, rather than dumping all of the bad property assets when Lehman went bankrupt, kind of waiting, letting those mature like a fine wine, and then finding a good time to sell them.
So obviously there are a ton of bankruptcies every year. None as big as Lehman, but what else has distinguished Lehman's long, slow death?
The size is, of course, important. The length is extremely notable because, I mean, we're talking about nearly 14 years here. Bankruptcies often, even when they fade away from the headlines, there's a lot of cleanup work to do. But, mostly we're talking a few years, for example, still going on in the background. There's things to sort out there. But, I mean, this is more than a decade we're talking about. Everybody has not forgotten about Lehman, but I'm sure wasn't aware that they still have an office space in the Bowery Savings Bank building in Midtown. People still kicking. It's their whole life. They're living and breathing Lehman Brothers to this day.
It is the cover story of the upcoming issue of Bloomberg Business Week, and it's a great read when you're actually reading it in the magazine, but it's also a really good read if you're reading it online because it's an interactive presentation. And I think it gives a really good explanation of how creditors are repaid, Jeremy. For people who aren't familiar with it, can you kind of sort of go through that waterfall?
Sure, yeah. So when we talk about a waterfall in bankruptcy, you want to sort of imagine a stack of champagne flutes that...
Those are coupes, by the way, not flutes.
Sorry about that, Joel.
Joel, did you... Hold on. Joel, did you know that before you were ordering the art and doing the graphics for this?
I like champagne, and I like my champagne in a coupe more than a flute.
I guessed that, I feel like.
It's just if you're going to drink it right, right? Sorry, Jeremy, go ahead.
Well, that's very okay. So imagine a waiter pouring the champagne into the glasses. I'm not even going to try to pronounce the correct word. The people with the most senior debt, we're talking about like secured loans, like a mortgage on a house is secured by the house itself. The people who actually have claims to the assets, they get their cups filled up first. And then below those, there are cups that have weaker claims to the estate or none at all. So they just get whatever is overflowing. In the UK, there was way more champagne than anybody anticipated. So people at the very bottom ended up getting their fill, and that's very unusual.
I don't know. I'm still stuck on Daryl. I mean, how many people are there?
I thought you were going to say you're still stuck on champagne.
I mean, I'm thinking, I hate coupe glasses, I have to say. They're so hard to drink out of. But anyway, Daryl Radigan, how many people...
Just makes you drink it quicker.
I don't know. Just to get it at a level where you can actually use the glass.
I'm glad you guys are in a good mood today.
It's my birthday, Tim.
Oh, that's right.
Oh, hey.
Yeah, I'm surprised you didn't
Champagne.
know that. Thank you. Later, after 5. Jeremy, how many people are there like Daryl Radigan that are just sort of helping to put Lehman finally in its final resting place?
Sure. So let's talk about the U.S. Not so long ago, a few years ago, there were a couple hundred people that were still sort of acting as portfolio managers for this like used financial asset sales lot. And now we're down to about 20 as best as we can tell. Not a lot of going into the office these days, as with many of us. But so...
We're all here.
We are all here today.
Jeremy, is there any sense about how much money has been eked out of this thing? Because one of the things that surprises me was like it just seems like there were gems in this thing, right? And everyone just assumes, oh, it's Lehman Brothers, it's gone. But it's like part of the reason this has taken so long is because there was so much value locked up in it, right? How much? Any sense of what was actually hidden in there?
That's right. Yeah. So it's hard to paint a complete picture of how much money has been paid out because there's so many different slices of the estate. That's part of why it has taken so long to sort out all over the world, many different classes of creditors. One particularly important class has so far recouped about half of their money, and for that class of creditors, we're looking at like $40 billion. That's double what Lehman itself estimated it would be able to pay out back in 2011. But some people even did better. Those ECAPS notes that Luca was telling me about, the very wonky pieces of financial engineering, some of these notes were actually given away for free in recent years because they were so worthless, thought to be so worthless. Those free scraps of paper could end up being worth millions of dollars depending on how some court cases in the UK play out.
Go ahead.
Well, one other curiosity is so much of the story, and Luca being based in London, a lot of the story takes place there. You did mention the U.S. element. How do the U.K. and U.S. elements relate to one another?
Right. So in the U.S., you've got the big parent company, like the ultimate, the ultimate parent of Lehman. But overseas in the U.K., they actually had their own deal. It's a subsidiary, but they're not run by the same people. In some cases, they don't like each other because they each have their own creditor bodies that they're representing and that they are trying to maximize value for.
I do love the idea of how you measured the length of this bankruptcy. 4 presidential administrations. I mean, literally lifetimes ago, and this thing is still going on. Jeremy, just in the last 40 seconds that we have with you, what is the legacy of the bankruptcy and the aftermath?
My big takeaway from this reporting process, things worked out a lot better for Lehman creditors than almost anybody would have predicted, except for the shrewd investors that as soon as Lehman went bust, when everybody else was freaking out and panicking, said, this seems really interesting. It's a very complicated structure. Let's sharpen our pencils and figure out what this stuff is really worth because we have an edge. The people that were able to do that, big asset managers specialize in distressed vulture investors, although they might not like to be called that, they did very, very well.
To sum it up in a word, inconceivable.
There we go. It
Oh,
all goes back to the
no.
Princess Bride. Joel Weber, editor of Bloomberg Business Week. Jeremy Hill, bankruptcy and distressed debt reporter, both with us in the Bloomberg Interactive Brokers studio. Check out Jeremy's story. It's the cover of the upcoming issue of Bloomberg Business Week magazine. Read it now on the Bloomberg and at Bloomberg.com.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. 60 minutes left into the trading session. Taylor Riggs and Sonali Basak here in New York. Caroline Hyde down there in Panama. We are joined now by our colleagues Tim Stenovic and Katie Greifeld. And we together welcome our full audiences across TV, radio, and YouTube. And Tim, you're taking a look at an equity market that is indeed at the lows of the session, and a NASDAQ 100 now off more than 5%.
Yeah, if you take a look at the NASDAQ 100, it's actually having its worst day since all the way back in September of 2020. The S&P 500, you have to go all the way back to June of 2020 to see a single day decline like this, Katie.
Obviously, even worse for big tech somehow. The NASDAQ 100, there's just 3 names in the green right now. Just incredible breadth to this sell-off that we're seeing.
Well, Tim, you gave us some great size and scope, of course, as we count you down to the closing bell. We take a look at how it's all shaking out. You're now taking a look at an S&P, also, again, at the lows of the session, off about 4% or so. And NASDAQ, as we've been mentioning, 4.75% here on the NASDAQ 100. I think the transports is also really interesting. That's off Sonali about 7% or so, and the stocks index also off 5%. So this is broad-based, and there isn't really a lot of safe havens within the equity market.
Truly broad-based, but let's take a look at what is falling worse than others. You have consumer discretionary in the S&P 500 falling almost 7%, Taylor. Consumer staples falling almost 6%. Infotech another nearly 5%. So yes, every sector here in the red today, but some seeing some real declines.
And there's been a lot of changes in the last hour, so let's see how all of my movers and my shakers shake out. Take a look at Ford. Now, this was actually up earlier. I think it was interesting. There's a big decline here in Europe's new vehicle sales. That plunged 20% in April, so you're certainly seeing Ford react to that news. You're down about 5.5%. Lowe's and Target, we know the stories, and I think, Tim, we're going to talk a lot about that in a few minutes. Just sort of the individual struggles that all of these companies are seeing, and at least for now, some value here within that lower income consumer. TJX continuing to outperform, really seeing a divergence here with some of those retailers. And that's where I wanted to go next, Tim. Take a look at this terminal. When we talk about all of the big inventory issues that are underway, it is a no wonder, of course, that you're starting to see those inflationary pressures, and you wonder, inventory was an issue for so long. Is it now a problem, and do you start to see some discounting? That certainly is going to be a question for a lot of these retailers.
Yeah, discounting, though, with consumers paying more for things like gas, for things like food, with companies paying more for fuel and for employees, you have to wonder how that discounting is going to hurt the company's bottom line. Hey, I want to talk a little bit about inflation. We had a great interview earlier today. Bloomberg's Michael McKee, international economics and policy correspondent, he caught up with Chicago Fed President Charles Evans. Check out what he had to say when it came to higher prices.
It's been very difficult for households, obviously. Gas prices have been extremely high. Food prices are high. I think worldwide factors are an enormous part of that. As inflation comes down, hopefully some of those prices will revert and they'll come down. Food prices often, can round trip, and energy prices too. But gas prices are high, and that's always, a negative thing for consumer confidence.
Not just a negative thing for consumer confidence, but as we saw with Target's results earlier today, a very negative thing that can even, catch companies like Target by surprise and impact their margins in a similar vein of what we saw with Walmart yesterday.
Absolutely. We got reminded of that in a big way in this week's earnings. And Tim, you and I were talking about this earlier. Retail earnings, they're not over yet. We have some of the apparel makers coming out next week. It's going to be a big one.
And when you think about supply chains to those apparel makers, I'm currently sat here in Panama. Of course, Panama Canal, one of the thoroughfares that's bringing so much from Asia through to the East Coast. This is a country at the helm when you're thinking about supply chain issues. When you think about the headwinds of also a strong US dollar. You said, Taylor, earlier that there are little havens within the equity market space. There's certainly the haven of the US dollar, but the problem is that's been the haven of choice all year, up about 6% versus the basket of other currencies. What does that mean for major importers like Panama? What does that mean for other currencies at the moment?
Really good point there, Caroline, and certainly doing a good job of keeping us up to date sort of on the international affairs as well, as we sort of put some of these individual equity market sell-offs into perspective. I think, Sonali, there was an interesting story that you and I were reading earlier about how the problems that we're seeing with Walmart and Target, could that actually be more helpful to the Fed at this point?
It's like what you always say, is inflation the cure for more inflation? Is there a breaking point here at which inflation starts to cool off because you cannot afford the prices that we stand at? Yet Yet the question still remains, to what extent is this still going to lead to a stagflationary environment? That is not just a stock problem, that's a bond problem.
It feels like we haven't seen that yet, sort of the idea that higher prices cure higher prices.
Yeah.
I mean, if you look at Target, you look at Walmart, Tim, it doesn't feel like actually we're starting to see any demand destruction. It's still a supply side issue.
It is, and that's why I think you're seeing this bifurcation on the lower end. And we learned this from Walmart yesterday. It's really hitting lower income consumers so much harder. We just spoke to Mark Hoplamazian, the CEO of Hyatt Hotels. Look, he serves a higher end consumer, and he did say that even though we are seeing higher airfares and higher costs for the company, he is seeing a really strong demand pulled forward into this summer season. So he's not concerned with the volatility that we've been seeing in the markets, at least not yet. And he thinks consumers, Caroline, at least at that higher end, are going to continue to be willing to pay.
But that's why you see, well, inflation isn't curing inflation at the moment because the companies are deciding not to pass it on to a lower income purchaser. We're seeing that's why Target is stomaching the overall cost inflation for itself. That why is Walmart's doing the same. They're fearful that you'll get to these sorts of buyer strikes. As it stands, though, look at the retail data that feels an age ago, but it was the beginning of the week. And we still look pretty strong in the month of April.
Yeah, and it's interesting. Is inflation curing inflation? I think the number to keep watching there is that inventory build and the rollover. Are sales growing at the same rate as inventory? I think that's a forward indicator here, but to your point, when do we see that happen?
We mentioned, of course, going cross-asset on this program. Caroline mentioning the dollar strength. We'll have to go back to bond yields. I think, Katie, was interesting. We were speaking with John Authors earlier, and he said he was watching the 10-year. We thought that it was going to hit 3%, and then it just started to rally with bond price higher, yield lower. I am curious, as we start to get some more reaction to this, how much of this was algorithm as well as maybe some technical-driven news?
Taylor, you're so right. It's like yesterday never even happened. That amazing spike in yields we saw. It is, it's an interesting question whether that is a reflection of growth fears at this point, whether the long end, it's moved on from worrying about inflation. Now we're thinking a few years down the road, what does that look like in terms of the economic environment when it comes to growth?
All right, well, we have a lot to talk about and a lot to think about over the next hour. That is going to do it for our cross-platform coverage for now. We're going to be back in less than an hour for Beyond the Bell as we count you down to the market close on Bloomberg Radio, television, and YouTube.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio in New York. Katie, we were just talking about some technicals, at least when it comes to the bond market. I was looking at equity market technicals as Taylor was talking. The S&P 500 right now at 3930. So it's down 158 points today. Breach that 4,000 level. And the next level to watch for Bloomberg, I think there was Abigail Doolittle earlier this week, or maybe it was Jess Menton last week, or Goldman Sachs. I cannot keep
They're
these
all
straight,
sort
right?
of the same
When you
bucket,
think about it from a technical perspective, is just above 3,900. I believe it was 3,917 is the next technical to watch.
That is a good memory. I will say, I remember when the 200-day moving average was a big thing, when the S&P 500 was just
I think it was Jess Menton, by the way, who told me that.
I mean, we can fact check this later, but I don't know. I feel like it's really hard to do technical analysis on this market. I mean, the fundamental news is so hot and heavy and important that, do technicals really matter, Tim?
Well, I'm having trouble pinpointing.
Question.
It is. And look, it's a good question for Gina Martin Adams because she does fundamental analysis and technical analysis. And she would say both are important because I've asked her that question before. What I would say, though.
It's a very balanced strategy.
It's it's like how I would answer a question in college, right? Yeah. When, you're trying to pick a side for a liberal arts class. Yeah. That's kind of how I rolled. I do wonder, though, about technical bottoms here. And we talk a lot about bear market rallies. Abigail Doolittle has spoken to us a lot about that. And, if you're seeing a rally like we saw late last week and early this week, you're going to potentially see a decline like we're seeing today.
Maybe in the future we'll look back on what happened yesterday and we'll be able to say, yes, that was the perfect example of a bear market rally, but it's so hard to know in the moment. Are we in a bear market? I'm not sure.
Yeah, it's like what Mark Hoplamazian told us. If you see an extended bear market, that's when he'll start to get concerned. All right, well, let's head to Washington, D.C. now for a check of the latest world and national news. For that, we turn to Nancy Lyons, who's standing by. Hey, Nance.
Thanks, Tim. The leaders of Sweden and Finland are set to be at the White House tomorrow after both applied to become members of NATO. Today, Defense Secretary Lloyd Austin met with his counterpart from Sweden, Peter Hultqvist. Hultqvist says it was an issue of security that prompted their decision to join.
This is a time when the democracies of Europe and North America must stand together against Russia's naked aggression.
Sweden's defense minister Peter Hultqvist, Turkey's president, says he'll oppose Finland and Sweden's application to join. The U.S. Soccer Federation has reached an agreement to provide equal pay to its men's and women's teams. President of the U.S. Soccer Federation, Cindy Parlow Cone, explains the terms of the deal.
They include identical game payments, pooling and sharing of all prize money, including World Cup prize money. We're the first country to ever do that. And revenue sharing that will be the same for both teams.
This comes just 3 months after the members of the U.S. women's team settled a gender discrimination lawsuit against U.S. soccer. Amazon is facing an administrative complaint from New York. Governor Kathy Hochul is alleging the e-commerce giant discriminated against pregnant and disabled workers by denying them reasonable accommodations and forcing them to take unpaid leave. New York is asking for the company to cease the discriminatory behavior and pay civil fines and penalties. And Martin Shkreli, the pharma bro who gained notoriety for unapologetically raising drug prices, has been released from a federal prison in Pennsylvania and transferred to a halfway house. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio in New York. Katie, I have been asking you a lot about Mike Novogratz because how do I explain this for people who are not on Twitter all the time?
Who don't just live online.
Who don't live online and are not on crypto Twitter all the time. Well, a few months ago, he tweeted a photo of a tattoo that he got. I believe
a big tattoo. It wasn't just
tattoo on
a
his arm.
little.
He got it in my neighborhood. I saw.
Oh,
yeah, when I was digging into this in Brooklyn.
Reporting.
I was doing reporting. It's a tattoo, a Luna tattoo.
Yeah.
And that's literally, I think, a good sign.
Top.
Or, well, I was going to say a good sign of how committed he was to this cryptocurrency.
Yeah, Luna, of course, is the token that was attached to the ill-fated algorithmic stablecoin Terra, which blew up last week. And Novogratz, like you said, he was a huge backer of this. He had said that he first invested in Terraform Labs in the fourth quarter of 2020. After this blew up, we didn't hear a lot from him. He went radio silent, which is very unusual for him.
If you're watching on YouTube right now, our amazing producer, Arya Agami, was able to get that picture of that tattoo up there right now.
And it's not casual. That is a big tattoo.
It's a huge tattoo.
That's like 6 inches.
They're permanent.
They are permanent.
So what did he say? What did he say about Luna?
He said that it was a big idea that failed. And that is what it was. It was a big idea. Algorithmic stablecoins, the crypto community have been trying to solve that problem for a long time because they don't want a stablecoin that's backed by fiat assets, and no one's been able to crack it. And this experiment in particular failed in a spectacular way, Tim.
Yeah, he said, quote, "The reserves weren't enough to prevent UST's collapse. With hindsight, things always look clearer." The billionaire did encourage individual investors to put money into crypto to follow a similar strategy and make sure to keep risk management in mind. Their crypto allocation should be between 1% to 5% of their assets, he said. Much more to come on a Bloomberg Business Week. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market. We are poised for the biggest daily drop in almost 2 years. Investors are assessing the impact of higher prices on earnings and prospects for monetary policy tightening on economic growth. S&P 500 index down 4% right now. Consumer shares plunging more than 6%. Target is tumbling by 26.4% after its earnings report this morning. S&P down 163, again a drop of 4%. The Dow down 1,165, a decline there of 3.6%. Nasdaq is down 562, that is a drop of 4.7%. 10-year 2.89%. Spot gold up $6.50 the ounce to $18.21, a gain of 0.4%. West Texas Intermediate crude 109.16 a barrel, lower now by 2.9%. Among the names reporting today after the close of trading, we will be hearing from Cisco Systems. Cisco down now by 4.4%. Recapping, S&P down 163, a drop of 4%, 10-year yield 2.89%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the Tiger Cubs, our audience is very familiar with them. They're so named because their founders all worked under the legendary investor Julian Robertson over at Tiger Management. We're talking about companies like Tiger Global Management, Coatue Management, Lone Pine Capital, Maverick Capital, D1 Capital, and more. It's something that Hema Parmar writes about, who's hedge fund reporter for Bloomberg News. She's with us now in the Bloomberg Interactive Brokers studio. On a day like today, Hema, where we're seeing, multi-year lows for the S&P 500 and multi-month lows for the NASDAQ 100. It's easy to say that, nobody's really doing well right now, but how much more are the Tiger Cubs hurting than the indices represent?
Yeah, the Tiger Cubs have been having a very difficult year. These are funds that typically focus on tech stocks or consumer stocks. They were all trained under Julian, and they have been known to sort of travel in packs. We are seeing a little bit more dispersion more recently, but some of the funds that have been hit the worst is Tiger Global. They're down, 44% in the year, which is putting them on track for their worst year ever. We're seeing D1, who is a Tiger Grand Cub. He came from Viking, which itself is a Tiger Cub, and they're down, about 20%. So you're seeing double-digit losses. Other funds are down, but maybe not down quite as much in the Tiger Cubs. But generally, if you've got exposure to like tech giants, if you've got exposure to some of these consumer companies, it's been very, very painful.
I feel like it's hard to feel bad for them because, the adage that I always hear is that, you have volatile markets, you have, blood on the streets, if you will. That's when active managers, when hedge funds should shine.
So for years, if you remember, hedge funds were complaining about there not being enough volatility. And then the past few years, we've definitely seen volatility. So when they were complaining about them not being enough, macro funds were really struggling then. Mm-hmm. And now macro funds are actually doing a lot better because they've been able to capitalize on this volatility. There's also good vol and bad vol. And so bad vol is when you just don't know what's happening. You don't see it coming. It comes up and down in spurts versus good volatility is a little bit more consistent. And so you're able to make more money from it.
Gosh, what really surprised me about reading this, Hema, was how much concentration there was, or maybe not concentration, but overlap there was between the stocks that these different hedge funds, these different Tiger Cubs held. Companies like DoorDash, Farfetch, Netflix, Shopify, Block, the company formerly known as Square, all held by multiple of these firms. How do you explain that?
So because they were all trained under Julian Robertson, they take a similar approach. They focus on stocks versus more diversified stuff. They do some privates as well, too. They've all been increasingly investing in privates. They focus on tech and consumer stocks. And so they tend to travel around these same, like Carvana and Netflix. These are companies that, all the FANGs for a long time, you saw them going in and out of them. What's interesting from the 13F filings that we saw on Monday was Maverick and Coatue both increased their stake in Carvana, which, as you see now, that is incredibly risky, and it clearly has not worked out well. We saw Coatue increase its stake in Netflix. We saw D1, Maverick, and Viking all increase their stake in Rivian. So these are, companies that have had a very, very difficult run. On the flip side, they've, while Coatue increased its stake in Netflix, Maverick and Tiger Global decreased. So it's not like everyone's doing the same thing. And we are seeing more dispersion. Our story shows some overlapping stocks. And while, in previous years you might have seen more people in and out of the same, you are seeing some splits, about even. I think it was Microsoft. 3 of the funds sold their stake and 3 added. So but yes, it's generally the same type of names that we're talking about here.
And it's interesting, you point out in your story that, for a long time, the Tiger Cubs, they really kind of went into the same names, but breaking apart a little bit now.
Yeah. So other popular names like JD.com, that was one where we saw some selling, about 4 of the 6 Cubs sold in those. Meta platforms, so Facebook, about 3 funds sold while 2 added. So, and what was actually really interesting, so if you look at one of the tables in our story, we picked up on what were the 2 biggest new purchases, like brand new stakes that these guys were investing in, and how did they do? And across the board, all of them are down. So that's Dave for Tiger Global, that's DocuSign for Coatue, that's Atlassian for D1.
Ticker Team.
Yeah, and so they're down like double digits. Now, I should mention some of these could be private stakes that have turned public post an IPO, and so they can't get out of them for several months. So they're stuck regardless, but it's clear it's not great.
So the 13 Fs that we get, they're backward looking. So we don't know necessarily what these hedge funds are doing right now, but what does your reporting tell you about their strategy moving forward for the rest of the year? How do they salvage this?
So yes, they file these documents because they have to. Nobody wants to, and they file them 45 days after the end of each quarter. So this gives us some insight as to how they were navigating those first 3 months. We're definitely keeping a lookout to see what are they doing now. Are they increasing these stakes? Are they decreasing them? It's tough because you can't ditch it all right away. I mean, I guess you could, but you're also losing on that side too. And then as you look at their valuations on the private stuff, there's a lot of speculation over like how are those things going to be marked down, as private markets are also a little bit complicated.
Hema Parmar is hedge fund reporter for Bloomberg News. She joins us from the Bloomberg Interactive Brokers Studios. Check out her story. It's written along with Tom Maloney, Hedge Fund to Hell, How the Tech Crash is Clobbering the Tiger Cubs. Well, we got a much more Bloomberg Business Week throughout the program today. We're going to head to Panama in just a few and check in with Carol Nasser. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. It is coming to a head in Pennsylvania. I almost said state, Katie, the Commonwealth yesterday having...
Good thing you caught yourself.
Good thing I caught
Can you
myself. The
imagine?
Commonwealth yesterday having a primary election. And right now, Dr. Oz, the celebrity doctor, and the former CEO of Bridgewater are locked in a too-close-to-call race there. We're going to get the latest, not just from Pennsylvania, but from all of the primaries that we saw yesterday in just a few minutes with Mark Niquette, politics reporter for Bloomberg News. First, though, Charlie Pellet, we have less than a half hour to go until the close of trading.
Indeed.
What's it looking like?
It is looking ugly for the bulls today. We've got the Dow, the S&P, NASDAQ, all on track for steep losses. Let me quantify steep. We could see the biggest daily drop in almost 2 years, with the S&P now down 173, drop there of 4.2%. And to be sure, we're trading at the worst level of the day right now. Year to date, the S&P down 17.8%. Today, again, worth repeating, the S&P at 39.15, drop right now of 173 points, down 4.3%. The Dow down 1,252, down 3.8%. NASDAQ down 583, drop there of 4.9%. The NASDAQ 100 index down 5.2%. The Russell 2000 down by 4%. 10-year yield 2.88%. Spot gold up 0.2%, 18.17 the ounce, while West Texas Intermediate crude down 3.2%, 108.83 a barrel on WTI. So steep losses for the Dow, the S&P, NASDAQ. Got to keep it locked into Bloomberg Radio to find out how things shake out at the close. And, of course, our colleagues on Daybreak Asia, they've got you covered for Asian market reaction tonight. Almost 300 Americans are currently dying of COVID-19 each day, according to the Centers for Disease Control and Prevention, far less than during the worst of the pandemic. In January of last year, before the widespread deployment of vaccines, average daily deaths peaked at 3,400. Graduation weekend upon us for a lot of people, a lot of families. People again wondering, though, about the risks of taking part in large events. Dr. Bhakti Hansadi is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
I think every single American right now is assessing or reflecting on where we're at right now, what makes sense for their own families based on the risks of their families. Some families still have immunocompromised adults at home, young unvaccinated children under 5. And so we're defining what is our new normal.
Dr. Bhakti Hansadi, Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track on a regular basis, Pfizer down now by 2.3%. ADRs of its German partner BioNTech down 1.9%. AstraZeneca's ADRs down 3.6%. Moderna down 3.4%. And J&J Johnson & Johnson down 1.8%. Among the names after the close of trading today, Cisco Systems down 4.4%, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, you might remember in recent edition of Bloomberg Business Week magazine, just last month, the cover story was all about David McCormick. He left a career in finance. He was the CEO of Bridgewater to go full MAGA in a bid for Senate. Well, that primary happened yesterday. He and the celebrity doctor, Dr. Oz, are locked in a too-close-to-call Pennsylvania primary race. Here to give us the latest is Mark Niquette, politics reporter for Bloomberg News. He joins us on the phone from on the ground in Pennsylvania. Mark, how are you?
Doing okay. Need a little sleep, but other than that, okay.
Yeah, I'm sure it's been a busy few days for you. We definitely appreciate you taking the time. Well, Dr. Oz was endorsed by former President Trump, despite the fact that David McCormick really went for it. Oz is leading with 31.3% of the vote. McCormick has 31.1% of the vote. What happens now?
Well, we're still waiting for a winner to be declared. It's within, like I say, about 2,000 votes, with 96.3% of the vote counted. But as of 11 o'clock this morning, there were still more than 100,000 mail-in ballots yet to be counted. Pennsylvania has a law that doesn't allow counties to start processing and counting mail-in ballots until 7 a.m. on Election Day, which guarantees that a lot of counties are still counting these mail-in ballots after the election. And we also had a snafu in Lancaster County where a printer's error made about 22,000 ballots unreadable by the scanners. They had to remake those by hand. So we're still in the process of counting ballots to determine who the winner is. And ultimately, it looks like it's going to be close enough to trigger an automatic recount, which will have to be completed by June 7th. So it could be a while before we have a final winner declared in this race.
It's a really important Senate seat, and I think that a lot of people, when it came to national coverage, who were outside Pennsylvania, they heard about David McCormick, they heard about Dr. Oz, but what about Kathy Barnett, who in recent days surged ahead? This was a name, I got to tell you, not familiar to me until yesterday.
Yeah, she was known in conservative circles. She was prominent in conservative media and had a following for sure. But you're right, it wasn't until the last couple of weeks that she actually started surging in the polls, in part because Dr. Oz and David McCormick had just beaten each other up for months, spending millions of dollars on ads, attacking each other. It sort of created the opportunity for an alternative to emerge, and Barnett did. But as soon as the polls showed her rising, she became a target, and a lot of opposition research came out about past comments she had made that were controversial. She was a supporter of the Stop the Steal effort on January 6th, and it sort of slowed her momentum, and she ended up finishing third in this race, pretty far out of the lead.
Yeah, definitely lagging behind, but it was really interesting to watch her sort of break her way into the national consciousness. But so let's talk about really quickly if the fact that Dr. Oz was endorsed by former President Donald Trump, still locked too close to call so far. How surprising is that? It seemed like that Trump endorsement was maybe expected to have a little bit more heft.
Yeah, it certainly didn't have the same kind of heft that it seemed to have in Ohio, where Trump's endorsement helped hillbilly elegy author J.D. Vance emerge from the middle of the pack to win the Republican Senate primary in Ohio. In Pennsylvania, there still was a lot of opposition to Oz among conservatives who just didn't trust that Oz was a true conservative. As I said, McCormick and his allies were spending millions of dollars to tell voters that, Oz had flip-flop on important issues like abortion, and he had sort of this history with his show that some voters just didn't trust.
Right.
So it wasn't, but the endorsement did sort of help Oz in the sense that he was able to say, look, the former president, thinks I'm a true conservative. He endorsed me, so therefore you can.
Mark Niquette, politics reporter for Bloomberg News, joining us from on the ground in Pennsylvania. Let's get to world and national news. To that, we go to Washington, D.C., and Nancy Lyons. Hey, Nance.
Thanks, Tim. In the wake of the deadly supermarket shooting in Buffalo, New York, Governor Kathy Hochul is introducing a series of reforms that she says will address a prevalence of high-capacity assault rifles and the ability for at-risk people to become radicalized online. One of the first steps she's taking is to sign an executive order that will alert authorities to anyone who could become violent.
Requiring the state police to file an extreme risk order of protection under New York's red flag law when they believe that an individual is a threat to himself, herself, or others. Previously, current law, it's an option to do so.
Hochul says the state will also open a new office dedicated to tracking domestic terrorism. Violence is not the only thing that's surging, so is gun manufacturing.
This new federal report shows licensed gun makers built 11.3 million firearms in 2020, a 187% increase over the number made in 2000. The Wall Street Journal says the report by the Bureau of Alcohol, Tobacco, Firearms, and Explosives is the government's first comprehensive assessment of gun trafficking in America in more than 2 decades. A record number of Americans bought guns over the past 2 years, driven by concerns related to the pandemic, protests, and rising crime. In Washington, I'm Amy Morris, Bloomberg Radio.
The Department of Homeland Security is warning about threats from extremists on both sides of the abortion issue after that leaked Supreme Court draft opinion. An internal DHS memo says the threats include burning down the U.S. Supreme Court, even murdering justices. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studios in New York. We are just about 18 minutes away from the close of U.S. trading. The Dow down 3.5%, the S&P 500 down 3.9%, the NASDAQ Composite down 4.5%, the NASDAQ 100, Katie, which earlier just had 3 stocks that were higher on the day, down by 4.7%. Let's talk a little bit about ARK, because Cathie Wood's flagship ARK investment, or Cathie Wood's flagship, I should say, is the ARK Innovation ETF, but her entire firm is ARK Investment. It snapped up millions of shares of Ginkgo Bioworks Holdings on Tuesday, shrugging off the health company's freefall. She's long been a supporter of this company.
She's long been a supporter of this company. It really fits in with her MO. She likes to buy the losers. She likes to sell the sellers. Or it's the winners rather, but I don't know. This stock in particular, Ginkgo, it's down nearly 80% from its September SPAC merger, and she's been picking up a lot of stocks on the cheap lately. It has not yet translated into the ARK Innovations ETF performance in a good way. That is, that fund is down nearly 56%, over 56% just this year, Tim.
Yeah, the ETFs have been battered by the ongoing market sell-off across once high-flying tech companies as investors juggle soaring inflation, policymakers push to drive interest rates higher. The ARK Innovation ETF has slumped 55%. The ARK Genomic Revolution ETF is down 48%. We should note the S&P 500 is down just 15%. Not just, but like
just 15, a casual 15%.
Yeah, it's a lot.
But it's interesting in this buying of more Ginkgo, she's going toe to toe with Bank of America because they actually downgraded shares on Wednesday. They said the near to medium term upside appears limited. So we'll see who wins out here, but are clearly a supporter. Bank of America says sell.
Yeah, we should note that Wood is vocal that her firm holds a 5-year investment horizon that factors into these buying sprees, despite day-to-day volatility for many of her targets. She's got 73.3 million shares of Ginkgo. That's worth about $200 million. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pella. 13 minutes to go ahead of the closing bell. Right to the numbers, because we have got the Dow down 1,239 points, down 3.7%. S&P down 168, drop there of 4.1%. NASDAQ down 563, lower by 4.7%. The NASDAQ 100 index down 5%. Russell 2000 today down by 3.7%. Stocks on track for the biggest daily drop in almost 2 years as investors assess the impact of higher prices on earnings, along with the prospects for monetary policy tightening on economic growth. The 10-year yield 2.89% after earnings. Target shares plunging 24.4% right now. Walmart was down yesterday after earnings. Walmart plunging today by 7%. Again, that 10-year yield 2.89%. Spot gold up $1.04, $18.16 the ounce, up by about 0.1%. A retreat for Bitcoin, 29,270 on Bitcoin, lower now by 2.7%. And West Texas Intermediate crude down 2.7%, 109.36 a barrel. So again, recapping steep losses for the U.S. stock market, biggest rout in almost 2 years. S&P down 172 now, a drop there of 4.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
For months now, with the U.S. distracted by war in Europe, North Korean dictator Kim Jong-un has largely been free to accelerate his weapons programs. The regime has conducted 16 missile tests since the beginning of the year. But the U.S. and its Asian allies are well positioned to confront Kim now. The election of a conservative president has brought South Korea into closer strategic alignment with Japan and the U.S. than it's been in years. And all three countries seem increasingly willing to risk tensions with China if necessary. On his upcoming trip to South Korea and Japan, President Biden should push for a more coordinated and forceful effort to contain the North. None of this should mean closing the door to diplomacy. But Kim Jong-un is more likely to return to the negotiating table if the cost of not doing so rises. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is the drive to the close. Right now, the S&P 500 having its worst day since June of 2020. It's down more than 4%. The NASDAQ Composite down 4.7%. The Dow down 3.6%. Let's get into it and drive to the close with David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management. He joins us on the phone from Summit, New Jersey. PPAC Private Wealth Management has got about $10.7 billion in assets under management. David, how are you?
Very good, Tim. Thank you.
You are very good on a day like today. I mean, it's pretty rough out there.
Well, surprisingly, the phones have not been ringing off the hook. Certainly all year, investors have been very nervous, and we've been holding a lot of hands. The problem for this year, Tim, has been where do you go?
Yeah.
Because people are also looking at those bond holdings dropping close to 10% as well. The alternatives like Bitcoin have crashed, so there's only cash. But, with inflation close to 8%, cash doesn't look very good for the long haul either. So it's a real hand-wringing time for investors.
So where should they go right now?
Well, so you go back to your time frames. Yeah. I think the first thing is you need to have a longer time frame than just next month or even year end. The time for the day trading and for the rapid swipe right and make a lot of money, that's all gone. Second, you need to be diversified. Before, of course, up until just this week, people dismissed a lot of losses. Those crazy tech investors, those crazy crypto guys, those crazy new economy people. They're the ones that are losing big, and they deserve it because they didn't pay attention to valuations. Now, of course, we're seeing it's creeping into mainstream Dow stocks. Walmart, of course, Target, disaster du jour. So it's spreading out. So you really need to be spread out. You can't hide in one area and say, I'm safe.
That's what I want to get into, Walmart, Target. But I do want to say it is my birthday. I was born 29 years ago in Summit, New Jersey. So cool to talk to you. But
Overlook.
Let's talk
Is that
about
right? Overlook Hospital?
Overlook, yeah, absolutely. Up on the hill. Overlooking.
Hence the name Summit, New Jersey.
Yeah, you got it. But let's talk about Walmart and Target. And I mean, you mentioned that investors in some of those more speculative names, they're getting crushed. But I mean, you just look at the declines that we're seeing in Target, losing, a quarter of its value. Just Walmart also really falling by the most since 1987. Just some pretty amazing size and scopes. Is that an overreaction? I know it's bad out there, but man, those are some big numbers.
I'm not sure it is an overreaction. When you look at the magnitude of the miss by Target today, it was pretty stunning. So what did we learn? I think that although consumer demand seems reasonable, there was just the complete unwillingness or inability by Target to pass along the higher prices it's seeing. And so that's disturbing for a number of reasons. One is that a lot of bulls out there said, gee, there's inflation, but inflation tends to favor stocks, and companies can just increase prices with inflation, not so much to worry about. Well, that story has been dismissed today. Second, of course, is the idea that that the consumer was going to stay strong, that they still had big bank accounts from government transfer payments. We had such strong employment, wages going up, that they could continue to spend. Well, that seems to have been dissipated today. The only thing people can hide behind is that the idea that consumers are now going to the experiential things. They want to travel, Airbnbs, airlines, and so forth, and they're moving away from the goods that Target and Walmart are selling. But I'm not sure that's so satisfying.
Yeah, I mean, look, you sound like the CEO of Hyatt, who we spoke to earlier in the program today, who did tell us that experiences, and look, he's of course talking his book a little bit or a lot, but we are still seeing people, buy those plane tickets, and we're hearing that from airlines as well. The question is demand destruction, David. Hey, before we get to that, though, I want to talk about the bottom here, because I'm curious if you are seeing signs that we're at a market bottom.
Well, we're definitely seeing signs. The question is, are all the boxes checked off? So some of the signs why we may be at a bottom is we're seeing extraordinarily low levels of sentiment among retail investors. Indeed, we're seeing huge cash pileups by institutional investors. By some measures, the biggest amount of cash is now being hoarded by fund managers since 2001.
Yeah, that Bank of America survey that came out yesterday.
Yeah, the flip side is someone said that they're also buying a lot of calls just to hedge themselves in case there's a big rapid run up in the triple Qs and the Nasdaq. So maybe they're not so cautious as that one metric would suggest. We're seeing a number of days, of course, with 95% of the stocks down on heavy volume. So those are metrics that are suggesting that we're near bottom. But the flip side is we saw the VIX, which is that fear indicator, soar to 85 in the pandemic month of March 2020. Today it's below 30. It hasn't gotten above 35 for a long time. So that would suggest we haven't had that one huge panic waterfall sale. Of course, the other thing is bottoms may be tougher here because in the past when we had kind of a quick bottom, the Fed was always coming to the rescue. Here, just yesterday, basically, Jerome Powell suggested that if the price of stomping out inflation was pain for consumers, so be it. But how can the consumers experience pain and there'd be no pain for investors?
And David, I mean, do you think the Fed does step in at any point? I know that, the Fed the obituary has been written a bunch of times, but at what point do you think they would step in? And we only have about 40 seconds left.
right now, you'd have to be cautious about predicting there being any Fed put anytime soon. In fact, I think some part of the strategy is to squash some of the demand that the Marriott CEO was talking about. And how do you do that? Because of the large bank accounts. You get them where it really hurts, which is their stock accounts. So they may want to see this market taken down a few more notches so that will help cool some of the demand at the high end in order to really get inflation out. So I don't think the Fed put is anytime soon.
All right. David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management, joining us on the phone from Summit, New Jersey. Just a couple minutes until the markets close here on this Wednesday afternoon. Taking a look, we are close to session lows. The NASDAQ down 4.8%, the S&P 500 down 4.1%, the Dow Jones Industrial Average down 3.6%. Coming up next, it's Beyond the Bell, our cross-platform coverage of the market close with our colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And 2 minutes away from a really wild trading day. Taylor Race and Shunali Bostic, of course, down here in New York, counting you down to the closing bell, here to help us, take us, well, to the bell and beyond the bell in our global simulcast, as we always do. We are joined by Tim Stenovic and Katie Greifeld, bringing together, as we always do, our television, radio, and YouTube audiences to, Tim, really parse through what has been a wild day. Shunali's been talking a lot about a NASDAQ 100 that, if this holds, it's going to close more than 5% lower.
Yeah, the superlatives certainly abound on a day like today with sell-offs that we're just seeing across the equity markets. For the NASDAQ 100, it's set to close at its lowest level since September of 2020. For the S&P 500, its lowest since March 25th of 2021. November for the NASDAQ 100, November 2020.
And it was interesting. We did see volume pick up a little bit into the closing bell, at least on the S&P 500, but interesting to see this sell-off on pretty low volume, all told.
Pretty low volumes, but you do see every gain that you made last year in the NASDAQ 100 wiped out this year already, 26% down on the year. And of course, we've been talking about more than 5% down on the day, led lower by a lot of consumer names, guys, as we saw from Target.
Yeah, no, and I think what is so interesting is perhaps the lack of superlatives that we see within the bond market. You have yields falling 10 basis points, but Tim, this hardly puts us back to the biggest sort of daily drop that we've seen in yields going back this year. We've had sort of bigger, significant moves, but it's sort of that correlation, the traditional correlation that catches my attention.
Yeah, I'm looking at the question of capitulation here. We just spoke to David Dietz over at PPAC Private Wealth Management, and he said we're seeing signs that we're at the bottom, but Taylor, not all the boxes have yet been ticked.
Well, let's certainly count you down. 5 seconds here to go. We'll wait for a settlement, and I'm going to let you guys do a lot of the size and scope as we think sort of about the closing bells here. And, well, it is a Dow Jones. Tim, can we do points? Romain isn't here.
Yeah, he's not here. We can do points.
And my rule is if it's more than 4 decimals, we can do points. So look at this. 1,161 points on the Dow, off about 3.5%. The S&P is additional laggard. You're off 164, more than 4% or so on the day. And in NASDAQ, you guys, as we've really all been talking about, off 566 points, settling down here almost 5% or so, 4.7%. I'll let you guys bring me a lot of the superlatives when we think about some of the biggest one-day drops that we haven't seen in a lot of years. The Russell 2000 right in line, Tim. I have to say, not a huge, big surprise here. You're off an additional 3.5%.
This sell-off is broad-based. I got to tell you, the Dow Jones has 30 stocks in it. It's down. All 30 stocks were lower on the day today. The S&P 500 had only 8 stocks move higher, 496 moved lower.
And we're getting some great breaking news that you're down now, the worst day since June of 2020 for the S&P 500. So that really sort of shows what today has meant in the middle of days that have frankly seen a lot of volatility, but today feels significant in that size and scope additionally. Katie, let me just quickly bring you some of the individual sectors that we've been looking at for some of the broader based issues going on underneath the surface. And indeed, there isn't any green here on the screen. Some of the best performers, utilities and telecoms, that feels so defensive here in this environment. You're off 1%. The worst performers on the day. This really speaks to everything we've been talking about, Katie. It's hardware, household products, it's autos, it's retailers. And guess what? It is food and staples, off 10% or so on the day. I'm looking at you, Target, looking at you, Walmart.
Yeah, and it was difficult to find gainers today. I did find a few, though. Let's start with TJX. So this is the parent company of TJ Maxx. Breath of fresh air amid all these retail earnings that we've been talking about all week. Sales came in a bit light. Wall Street, though, sees a silver lining in the margin story. Of course, that was a big issue for Walmart, for Target. TJX's profitability outlook, it was much better in comparison. You saw shares gain over 7%, biggest gainer in the S&P 500. EA, I was hoping this company would stay a gainer, and it did, just barely though, only up 0.4%. That came after Cohen said that the mobile release of its Apex Legends game might generate more than $300 million in annual revenue. Again, shares up about 4%, just one of two gainers in the NASDAQ 100. Brutal sell-off today. I'm going to end with another happy earnings story, though. We had the Container Store. They actually reported yesterday after the bell. Revenue beat expectations. Net sales forecast also topped estimates. That was good for a gain of almost 7%, Tim.
All right. Well, Taylor mentioned Target and Walmart were two of the stocks leading the S&P 500 lower, at least on a percentage decline. I want to start with Target because that's certainly the story of the day today. The company having its worst single day. You have to go all the way back to Black Monday in October 19th, 1987. It finished the day today down by 25%. The company this morning trimmed its profit forecast. Operating profit, the company said, will amount to only about 6% of sales this year. That's a full 2 percentage points below the previous forecast. The company CEO Brian Cornell saying that the surge in costs in freight and fuel, they show little sign of easing. These results from Target just rippling through the retail industry today. Dollar Tree, Tractor Supply, Costco, Dollar General, and more all falling today as a result. And interestingly enough, Walmart not being spared even after yesterday when it fell by more than 11%. Now it has fallen to its lowest level since July of 2020. And then we also saw on a points basis, mega cap tech companies lead declines on the S&P 500. Apple finishing the day down by 5.6%.
Tim, I'm going to eat my words here. Don't ever let Romaine know that I did this. But today felt like...
He might be watching. I know he's out today, but he might be watching.
Today, frankly, it felt like an equity kind of day. It felt like today where bonds were, frankly, a secondary story. But we're going to do them because the moves were significant, despite really the focus that has been on the equity valuations and some of the big way we're thinking about the health of the consumer and inflation. But some of that was a bond story a little bit today. You're down about 7 to 12 basis points pretty much across the curve, really highlighting the 10s and the 20s. There's a 20-year bond auction today, but really classic a risk-off story today with a flight to quality in full faith and credit. Tim, I think what's interesting, though, is we continue to get Federal Reserve comments here. This, of course, coming from the Philadelphia Fed, Patrick Harker. He's commenting in a speech and saying that he does indeed expect 50 basis point rate hikes at June and July, but he's seen these hikes at a measured pace after June and July moves. And of course, looking at GDP growth of about 3% this year. Demand is still strong, he says, and the job market to stay tight through 2022, but really trying to reassure the market that you get the 50 in June, the 50 in July, and then, quote, measured after that. Tim, I'll let you tell me what measured means.
Yeah, well, here's what he said, quote, after that, I anticipate a sequence of increases in the funds rate at a measured pace, there it is, Taylor, until we are confident that inflation is moving toward the committee's inflation target. A reminder that inflation target is 2%. We are still a far cry from that. The question is, to what extent does the Fed have to raise interest rates beyond 50 basis points at the next two meetings in order to achieve that? And then also, what's the market pricing in at this point? And we can't forget about the conversation that we had yesterday, what we're seeing at startups in Silicon Valley, and then what we're seeing at publicly traded companies like Netflix in terms of the belt tightening that we're seeing there, because perhaps that is what the Fed wants to see.
Belt tightening in the stock market, but if you look at that steep drop you saw in the S&P 500 today, the worst that you saw since 2020, June of 2020, the NASDAQ 100 down 5% was only the worst day since May 5th. So that shows you that the NASDAQ has just been taking it. And the question is, how much more can it go when the Fed's course of action here is rates higher to the cost of lower inflation, which is what the market wants to see despite that NASDAQ drop.
And it is amazing that you still saw that NASDAQ drop, which was only the worst drop since May 5th, but still really brutal, broad-based sell-off there. Even on a day when you saw yields actually cool off a little bit, that drop in yields, it wasn't anything really to write home about. But still, when you look back at what happened on May 5th, yields were up by 10 basis points. So you're really just seeing that risk-off move actually force a bid for bonds.
Finally, if you're in your 60-40 like Romaine is, then maybe at least the bond portion is working out today. I think, Tim, when we think big picture, we were speaking with a Target and a Walmart analyst over at Barclays at about 3:30 Eastern, and sort of highlighting the big miss between what these companies are saying versus what the street was forecasting. Of course, so hard to even think about modeling these inflationary pressures in this environment, but also big picture saying that we need to start talking about some of these concerns. You can't tell me that you're going to cut the bottom line when the top line is strong, but then tell me there's no macro issues to worry about, and we need to start having those conversations.
Yeah, those conversations include conversations about the price of fuel, the price of food, and as we learned yesterday from Walmart, these higher prices are hitting different people at different ends of the income spectrum a lot differently, and we saw that yesterday too with earnings from Home Depot. So if you actually have money, you're going out and you're spending it, you're renovating. If you're on the lower end of the income spectrum, you're moving to generics. You're buying smaller, you're not buying a gallon of milk anymore, you're buying a half gallon of milk, and you're buying less at a single time.
The thing that's concerning a lot of the people that we're speaking to also is how much consumers are buying on credit. The cracks starting to show in the consumer market when you're having to rely on your credit card rather than paying in cash. The question marks around how long that can last as rates rise. Remember, it's already expensive for a consumer to borrow. It can only get more expensive.
And we'll see what happens if, a company like Target, like Walmart, does actually start to push on those prices more than they have, whether that consumer remains resilient.
Well, that is going to do it for our cross-platform coverage of the market close on a Bloomberg TV, radio, and on YouTube. We are going to be back tomorrow, same time and same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Broker Studios in New York. Katie, I want to talk about Cisco. Shares are down 12% in the after hours right now after the company reported results just after the market closed. The company cut its fiscal year 2022 adjusted EPS from between $3.41 to $3.46 down to $3.29 to $3.37. Cisco says historically Russia accounts for about 1% of its sales. The company did say that it was pulling out of Russia, or that pulling out of Russia, cost $200 million in revenue. Well, let's talk broader markets right now as we get an idea of really just how things settled. For those who are just tuning in, the NASDAQ composite finishing the day down by 4.7%. The S&P 500 finishing the day down by more than 4%. The Dow Jones finishing the day down by 3.6%. Let's bring in Bloomberg News' Emily Grafeo now, who joins us live in the Bloomberg Interactive Brokers Studios here in New York. Emily, good to have you with us. The dust has settled. I mean, albeit only a little bit from the close of trading, but give us big takeaways. We talked a lot just now on our simulcast with our friends at Bloomberg TV about Target and the implications there, but what else did we see today?
Yeah, I was looking at the real big sell-off in big tech. If you look at the NASDAQ 100, we finished down over 5%, but it was only the biggest closing decline since May 5th, which I feel like really
speaks to volatility,
exactly.
Right?
It really underscores the volatility that we've seen when you think about we're just seeing these large drawdowns almost every day. And then that buy the dip strategy that worked so well during the pandemic is not working as well right now.
Yeah, it feels like we waved goodbye to that a long time ago. But Emily, I know you've been spending some time with our currencies and bonds team. The dollar, super strong. What's going to stop it? Is this a haven bid or is this something else?
Today it was absolutely a haven bid. And I think you saw that too because the yen was a little bit stronger too. So everything else was down, but the dollar was up, and people were also heading into the yen, kind of again underscoring that it was largely risk off today. As far as where the dollar can go, I've been hearing a lot of strategists saying they don't think that this rally is going to end anytime soon, particularly because there's just so many fears of a global growth slowdown and inflation, and it's almost like where are you going to go besides heading into the world's reserve currency?
Mm-hmm. Especially as rates rise in the U.S. I mean, that theoretically makes U.S. debt, U.S. securities a more attractive environment. But let's talk a little bit about bonds because, I don't know, Taylor Riggs, she was on it. It's not too big of a move in bonds. But
It's an equities day today.
It's an equities day today, but you did see a
Finally.
bit of a bid come back, especially into the long end.
Yeah, and there was also that Treasury auction, so that
went well.
Yeah, it did go well, so we saw a little bit of movement there. But again, continuing to watch just how bonds react to the way that investors are assessing, okay, how many rate hikes are we going to get? How tighter is policy going to go with the Fed, and how is this all going to be impacted by this rising inflation? And we're finally seeing that inflation really creep into all sectors of the equity market with Target today.
Okay, I know you can't answer this question, but it doesn't mean I'm not going to ask you, Emily, about a bottom and what your reporting is telling you about a potential equity market bottom. And I know you've been spending a lot of time with the rates, with the FX team lately, but we're getting a lot of questions as we do hit new lows for the year. When is capitulation?
Yeah, Tim, that is really tough, particularly because everyone's been just telling me all my
nobody
sources
has a
about
crystal ball?
the dollar, and no one really does have a crystal ball.
You didn't bring yours?
No, not today. Not for your no birthday
But
gift
the
for you.
reason I ask is because a day like today, we are just seeing, in the S&P 500, Katie, you had to find gainers, and I pity you today.
I found 3.
Only 8 stocks in the entire S&P 500 were in the green today. 496 were lower. In the Dow, it was even uglier.
Yeah.
All 30 stocks of the Dow were lower today.
Yeah.
Yeah, I mean, strategists do, sometimes they say that if you see a broad-based sell-off, that it means we're at a bottom, but I definitely won't make any projections or any price calls there.
It was interesting to see volatility, at least measured by the CBOE Volatility Index, come back, because even though it's been a little shaky, I know that we rallied yesterday, that felt a little bit weird because Jerome Powell, he did not sound dovish yesterday. The VIX had actually been falling really since last Monday, but you are starting to see volatility come back. And I mean, what does that look across asset?
Yeah, I had actually noticed that too right after the Fed decision. I was looking at the VIX and it hadn't moved that much. But then today it did move a lot more. But yeah, when we're looking at the volatility, yields have also been doing that too, particularly now that I'm on the FX rates team, learning about this and watching this. I am seeing that we tend to see movement in several different directions throughout
a
trading day.
It's a great time to learn about bonds. You timed that well.
It is, Katie.
There's nothing like a U.S. Treasury
Katie's
bond.
also just saying that because she just loves learning about bonds and talking about bonds at any time. I am wondering, Emily, about what else we should be looking for. I mean, what are the metrics you're looking at? What are you trying to use to understand where this market's going?
I'm just going to keep watching any indication that we get from the Federal Reserve about the path of, how they're going to deal with their balance sheet and whether we get any other signals about how they're thinking about inflation and the path of rate hikes. We've had a lot of Fed speakers, and it's lately felt like we're getting a lot of clues as to what we can expect for each meeting after from those Fed speakers. So that's definitely something that I'm paying attention to.
But it's interesting. It's mostly been on what's going to happen with interest rates. I would love more details on the balance sheet. I think everyone on the street would as well at this point.
Yeah, I think so too, because we can't forget that, and Jay Powell has talked about this, that the Fed's instruments are blunt, but they're
famously blunt, actually, Jerome Powell said.
But it's not just rising interest rates. It's also, when it comes to unloading the balance sheet.
Several tools in that toolkit.
Yeah, but they're blunt.
They're blunt.
That's the problem. What details, Katie, do you want to see when it comes to the balance sheet?
I want to know,
we know it's going to start
the big
to
wild card, the big wild card. Do they ever sell? Do they ever get to the point where they sell treasuries? I mean, it's such a long shot, but once upon a time, 50 basis points was a long shot. 75 basis points, I know they're trying to take that off the table. Doesn't feel like they have successfully or really forcefully done that yet. So we'll see.
Yeah, we'll see. Emily, before we let you go, in terms of the remainder of the week, more volatility ahead, what are your sources telling you?
Yeah, preparing for more volatility. Don't get used to a big downturn or a big, revival in
Hunker
the
down
equity
in that
markets.
US dollar.
Yeah, exactly. A lot of people are saying that they're continuing to expect more dollar strength as the volatility persists.
Oh, the S&P 500 having its worst day since June of 2020. A big thank you to Emily Grafeo from Bloomberg News for coming in and giving us her assessment of the markets. In the meantime, let's get a check with Charlie Pellet, who's been following these moves closely. Hey, Charlie.
Well, hello there indeed. Keeping an eye on Cisco Systems before we got to what happened on Wall Street today. You guys covered that nicely. Cisco out with earnings. Moments ago, Cisco plunging after hours, down now by 14.9%. Cisco, the biggest maker of computer networking equipment, does expect revenue to decline in the current quarter, hurt by disruptions stemming from Chinese lockdowns and the Ukraine war. Again, after hours, Cisco now plunging by 15.1%. Biggest drop for the U.S. stock market in almost 2 years. The S&P today plunging by 4%, down 165 points. The Dow was down 1,164 points, down 3.6%. NASDAQ down 566 points, down 4.7%. Investors are assessing the impact of higher prices on earnings and prospects for monetary policy tightening on economic growth. Speaking of earnings, Target, a prominent decliner today, plunging 24.9% after earnings. Walmart, similar story yesterday. Walmart down again today, dropping another 6.8%, as might be expected. Plenty of carnage in retail today, with a number of other retailers moving lower. Macy's, for example, down by 10.7%. 10-year yield, 2.87%. Spot gold up $1.68.18. 16 the ounce, up 0.1%. West Texas Intermediate crude oil down 3%, 109.02 a barrel. So again, recapping, 4% drop today for the S&P, a 3.6% drop for the Dow, NASDAQ down 4.7%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as you know, if you've been listening to our program, you know that my co-anchor Carol Masser is off in Panama. No, she is not on vacation. She's at the Bloomberg New Economy Gateway Latin America event that's happening throughout the week. She's had some incredible panels and guests thus far already. And Carol Masser joining us live now from Panama. Carol, how are you? It's good to see you. You're not on the beach?
I am not on the beach, although the beach is right here. And Tim, I'm listening to you and Katie on air and just, about the market volatility that we're seeing today. And I'm thinking about so much of what we're discussing here at the New Economy Forum in Latin America, the problems, the global issues that we're facing right now. And we're talking about higher rates. What does that do for capital flows? We're certainly seeing it play out in the financial markets. I'm thinking right outside, it's the Pacific Ocean. And there are all of the big ships just queuing up to go into the Panama Canal. And I'm thinking about all of the supply chain, challenges that are facing us. These are some of the things and the problems that the New Economy Forum in Latin America are trying to really solve and figure out what is the role of Latin America in all of this. Also, at the same time, how do we make sure that innovation continues, entrepreneurship continues in Latin America? And that's what my panel was about. It was really fun. We talked with Angelica Fuentes. She heads up an organization that's all about microloans to women in particular. Mate Pence, he's the co-founder and co-CEO of Loft. They're an exchange model for buying and selling properties. And they're a unicorn based in Brazil. And then we had Sumita Pandit. She is the chief operating officer over at dLocal. They have gone public. They went public last year. They too are first hit unicorn status in Uruguay, the first company to do so. And we talked about capital flows so much. Here's a little clip from our conversation where Sumita talks specifically about startup money for the underserved. Check it out.
I think there are multiple reasons for that. I think in most cases what we saw, and I would say this is more when I was an agent and was trying to connect what I would call founders with capital sources. What we saw was that there was a big impact because of the networks that people lived in. A lot of the capital raises that happened in the earlier stages of a company's life journey typically happen from friends and family. Who you network with, what's your immediate circle makes a huge difference to where you end up taking your company. I do think that that's changing. I think there is more structured and purposeful investment criteria that investors are using today. And this brings into question an important point, which is close to my heart, which is about how purposeful should it be? Should investors have more specific guidelines as to where and how they invest? Or should it be really driven by just a profit motive? And I think that's the social question we need to understand as we think about investors. Most investors are driven by a profit motive. There is no other motive. But sometimes just a profit motive is not the best motive when it comes to where capital is actually flowing in the short term. And I think when there is abundant capital, it becomes easier to go after social causes. I think as capital tightens, it's going to actually become harder for some of the social causes to get funded. And that's going to be an important question. And I'm curious to hear Angelica's views on this. You're very close to this, Angelica. But I would think that if capital actually becomes more constrained, it's going to be harder to do good than to make money.
Yeah, that's a big question of our time. That's Sumita Pandit, the Chief Operating Officer of dLocal. They are a global payments platform. They work with Amazon, they work with Microsoft, and basically allowing these big companies to access consumers in the emerging market. Really fascinating. She was talking about Angelica Fuentes, she referenced, who is a founder and president of MoveUp, and they provide microloans to predominantly women. And it's not only about providing money, but also education, because so many women in Latin America are not a part of the financial system. They're not underserved. They are just not served at all. So, it's just interesting. We talk about innovation, right? We saw so much happening during the pandemic, but we're seeing it happen around the world.
Carol, I got to ask, in the context of today's sell-off, I'm wondering from a private company perspective, and you and I talked about this a lot at Milken a couple weeks ago, and the tone was certainly, I think, cautiously optimistic. I'm wondering what the tone is there when it comes to these companies having access to capital. Is there a concern that financial conditions are tightening?
Absolutely, especially for Latin America. I mean, $16.3 billion in venture capital money flowed into this region last year. That was more than the entire decade or prior decade. And it made it the region the world's fastest growing when it came to venture funding. So they have had so much money. SoftBank has been doing a lot. Everybody is pulling back. So the spigot was turned on big time. It's dried up. And so there are concerns. And what that means for some of the more established players, like a dLocal, like a Loft, that maybe then they are able to acquire some of the smaller companies that might be struggling to raise their next funding round. And so we're going to watch that in the future. But it does make it harder for the startup community going forward, and especially when you're trying to get to the underserved.
I think that was a really poignant point that Sumita ended on, that it's going to be harder to do good than it is to make money. And I don't know, when you think about investing along social values or just values you may hold, sometimes it feels like it can be a luxury of the bull market that you're able to do that. But when you're in a period of volatility like this, it's harder to sort of funnel your money towards investments you might feel good about necessarily.
Katie, it's a great point. And I do feel like, I think there's a global conversation increasingly picking up momentum about ESG. I've had some side conversations with lots of folks who are saying, it's time for folks who are saying, yep, we're all ESG, look at what we're doing, that it's time to have metrics to measure it, because investors want that increasingly. And it's not fair to just say it without doing it. And increasingly, we want to understand to make sure that we are doing good and not just talking about it, and making sure that it's not just when good times are out there in terms of financial markets and funding, that it's there consistently. But so we're seeing that momentum pick up.
Carol, just in the last bit of time that we have with you, what's the plan for tomorrow and for the remainder of the week? What do you have coming up?
All right, a little panel that's tackling a little issue. We're talking about global food security. I don't know if you saw India doing export controls over the weekend. This is not good when countries, we saw it with the pandemic, right? We saw it with the vaccine, just worrying about their domestic home front. It's not good when that happens. And so we're having a rethink about where we're getting global food supplies. Are we at a crisis? Janet Yellen talked about it earlier this week. She was in Warsaw saying, yep, we are in a global food crisis. So how do we fix the situation? How do we find people who can grow more, produce more supply? So yeah, just a little problem to tackle.
Well, Carol, we're looking forward to hearing from you again tomorrow. Good luck for the remainder of the week. Bloomberg Business Week's Carol Masser live from Panama. Check out event times and registration at BloombergNewEconomy.com. You're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. We are in the midst of earnings season. We're continuing to get results from companies left and right. One of those companies is Doximity. They reported results yesterday. We're going to talk to the company's CFO, Anna Bryson, in just a few minutes. First, though, Charlie Pellet, there has been a lot happening after the market closed. Give us an update.
Indeed. Let us begin with Under Armour. CEO Patrick Frisk stepping down from the struggling athletic wear brand after a disappointing quarter earlier this month hammered the stock. Right now, we've got shares of Under Armour going under. They're down by 7.7% after hours. Also keeping an eye on Cisco Systems, down now by 16.35% on, down 16.1% on Cisco Systems. It is the biggest maker of computer networking equipment. It does expect revenue to decline in the current quarter, hurt by disruptions stemming from Chinese lockdowns and the Ukraine war. So certainly keeping an eye on Cisco after hours, and no doubt that will be a major impact on trading tomorrow. Stocks posted the biggest daily drop in almost 2 years as investors assess the impact of higher prices on earnings and prospects for monetary policy tightening on economic growth. David Dietz is senior portfolio strategist at PPAC Private Wealth Management, and he was our guest right here on Bloomberg Business Week.
Before, of course, up until just this week, people dismissed a lot of losses. Those crazy tech investors, those crazy crypto guys, those crazy new economy people, they're the ones that, are losing big, and they deserve it because they didn't pay attention to valuations. Now, of course, we're seeing it's creeping into mainstream Dow stocks. Walmart, of course, Target, disaster du jour. So it's spreading out.
And today we did see Target after earnings plunge by 24.9%. Walmart, of course, down yesterday. Today, the retailer declined by another 6.8%. 10-year yield 2.88%. Spot gold little changed, up $1.30 the ounce to $18.16, up less than 0.1%. West Texas Intermediate crude down 3%, 108.95 a barrel. Bitcoin today down 3.3%, just above 29,000 right now, 29,073 on Bitcoin. So again, recapping here, S&P down 165, drop there of 4%. An earnings miss for Cisco Systems, shares plunging after hours. And again, the CEO of Under Armour, Patrick Frisk, is stepping down. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stenovec and Katie Greifeld were live in the Bloomberg Interactive Broker Studios in New York. The digital platform for medical professionals, Doximity, reporting results yesterday. The company did beat in the latest quarter. Investors, though, sending shares of the stock lower after the company's first quarter revenue forecast missed the average analyst estimate. The company also authorizing a new stock repurchase program to acquire up to $70 million worth of shares. Joining us now, once again, is Anna Bryson, CFO at Doximity. Anna joining us on the phone from San Francisco. Anna, how are you?
I'm great. Thanks so much for having me, Tim and Katie.
Well, it's good to have you back with us. So shares for the year down 39%, shares down today more than 10%, despite the fact that it was a pretty good quarter last quarter for you, and that you authorized a new stock repurchase program. Of course, the market on a whole has been absolutely getting beat up. What are the takeaways from the current quarter that you can share with our audience?
Sure. So as you mentioned at Doximity, we're really building the physician cloud to support the modern medical professional. And we are really pleased with what we achieved this last quarter. We had another strong beat and raise quarter in Q4. We outperformed all areas of our guidance. So we grew revenue 40% over the same quarter last year. And we ended the full year with $343.5 million in revenue, which was an increase of 66% year on year. We also posted strong profits this quarter. So our adjusted EBITDA margin was 42% for the quarter and 44% for the year. And I think what I'm most excited about is that we grew adjusted EBITDA 132% year over year this past year. And then finally, just another update that's non-financial. We hit a major milestone from a network perspective. So we surpassed 2 million registered members this last quarter, which is something that we're really, really excited about.
Well, when we think about, growing that number, I want to talk about a stat that immediately jumped out to me in the notes that you sent us, that the fax machine is still one of the main interoperability standards to get information back and forth between medical institutions.
Did you say fax machine?
I did say fax machine.
wondering.
I have to admit, I've never even used one. It's like a museum item. But when you think about that stat and you think about, modernizing the medical landscape, how do you bring in some of those professionals that are stuck in their ways?
Sure, and it's a great point. I mean, in a world where innovation in science and technology is booming, and the healthcare industry remains largely fragmented and siloed. So, on the one hand, we have the ability to deliver COVID vaccines in record time, yet on the other, the legacy fax machine still remains one of the main interoperability standards to get information back and forth between medical institutions. So for us, what we're really focused on is helping physicians with their workflow tools. So we're really here building the Bloomberg for doctors, if you will, in order to help physicians be as productive as possible. We're focusing on digital fax, digital signature, telehealth tools. And we believe that as we help make physicians more efficient, they'll continue to use our platform. And I think that's one of our key selling points here.
Anna, the word of the week has been recession. Concerns about a recession this year, concerns about a recession in 2023. Of course, the Fed is trying to deal a soft landing, but we'll see if that can happen. Are you concerned at Doximity if there's going to be a recession?
Well, I think what we've seen before is, healthcare is an industry that's recession resilient, right? There's the need for critical medications and life-saving services that doesn't change in the midst of a recession. So, our business is strong and our customers are strong. And so we really are much less concerned about that than some others might be right now.
And Anna, something we saw with a lot of companies is that a lot of growth was pulled forward during the pandemic when basically everyone went online. Is that a concern for Doximity?
If anything, we think the pandemic provided a great opportunity for us to really help the shift to digital along. I mean, healthcare's long been incredibly under-indexed on digital spend, and the pandemic really pushed that forward and accelerated that, and it gave us the opportunity to provide tremendous value for our clients as they're really kind of dipping their toes in digital strategies. And so we think that over time, what that's done is it's just helped spur this kind of one-way street in this massive shift to digital that will likely be decade-long.
Anna, we've only got 15 seconds left. How do you get the remaining U.S. physicians that are not yet members of Doximity on the platform?
Well, we have over 90% of graduating med students using our platform, and so we have a natural funnel that will continue to grow that membership base over time. And our focus is to keep building out products to make our platform as attractive to every physician as we possibly can.
Anna Bryson is Chief Financial Officer of the digital platform for medical professionals, Doximity. Anna joins us once again on the phone from San Francisco. The company did report earnings yesterday and authorized a new stock repurchase program to acquire up to $70 million worth of shares. You're listening to Bloomberg Business Week. Let's go to Washington, D.C. now for a check the latest world and national news. For that, we turn to Nancy Lyons. Hey, Nance.
Thanks, Tim. The prime ministers of Finland and Sweden are heading to the White House tomorrow to discuss their plans to join NATO. Bloomberg's Irv Chapman reports from Washington.
National Security Advisor Jake Sullivan was asked if the White House backs security guarantees for the two countries before their membership gives them NATO's mutual defense commitment.
The United States is prepared to send a very clear message, as are all of our European allies, that we will not tolerate any aggression against Finland or Sweden during this process. And there are practical measures that we can take along those lines.
President Biden himself responded to a shouted question whether he can convince Turkey not to block the accession of Finland and Sweden. He said simply, "I think we're going to be okay." In Washington, Irv Chapman, Bloomberg Radio.
Well, the number of coronavirus cases is increasing in the U.S. CDC Director Rochelle Walensky provided an update today.
While cases remain much lower than during the Omicron surge this past winter, the current 7-day daily average of cases is now at about 94,000 cases per day, which is an increase nationally about 26% over the previous week and a threefold increase over the last month.
Walensky says many senior citizens are eligible now for a second booster shot and should receive one because shots become less protective over time, especially in the Omicron era. Far fewer Americans are applying for mortgages to buy homes. Today's report from the Mortgage Bankers Association shows purchase applications fell 12% last week. Applications to refinance current mortgages dropped another 10%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Broker Studios in New York. Katie, this was probably the first. Is this the first story I sent you this morning? No, probably I sent you Target.
You actually
before.
tweeted it, yeah.
Oh yeah, I
too.
tweeted this story too.
I saw it.
Yeah, the Hamptons pool craze. This story by our own Kate Crater, among the most read on the Bloomberg terminal. It got what we call internally a read spike, which means a lot of people are reading it
All at once.
all at once. So among the most read today, the Hamptons pool craze has posh owners waiting up until 2023 for a dip. There's like a buy the dip joke in here.
There definitely is. And a
I can't
dip in
quite
the
find
pool,
it. Yeah,
too.
that's what I mean.
Yeah.
Yeah, well, you're not going to be able to buy a dip in the pool if you're not in line getting ready for that new pool in your Hamptons place.
That's a lot of puns to follow in one sentence. But yeah, I mean, we've been talking about the price of everything going up, and it's affecting everyone, including Hamptons pool owners. So she spoke to a lot of people for this, and some of the stats that she dug up, that if you look at products like pool liners and covers, they're up to 40% to 50% over the past 12 months.
Okay, well, here's what's interesting. It's all the problems that we've been talking about a lot, okay? Supply chain issues, lack of workers, all of the issues that are facing, the U.S. economy. This is playing out in the pool industry. But there's, interestingly, another one that goes beyond the supply chain. This, according to the CEO of the Laurel Group. It's a landscape design company that also does general contracting. He says, quote, there have been spot shortages of pool heaters, which is related to the freeze in Texas in 2021. They needed 1 million heaters. Every single heater in Texas had to get replaced. Some estimate that more than 20,000 pools were damaged in that ice storm last year.
I love that. It just really speaks to just how delicate and intertwined these supply chains are.
Oh,
One thing goes wrong, 2 years ago, and just now people can't fill their pools.
2021 was last year.
I can't. Time is
okay.
a flat circle. So.
It is. Yeah, check out this story. Kate Crater wrote it. It's on the Bloomberg terminal, all about the problems that Hamptons homeowners are facing in trying to get a new pool. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the companies reporting earnings after the close of trading, Cisco Systems. It is the biggest maker of computer networking equipment. It says it expects revenue to decline in the current quarter, hurt by disruptions stemming from Chinese lockdowns and the Ukraine war. Right now, Cisco is lower after hours by 12.5%. Under Armour CEO Patrick Frisk is stepping down from the struggling athletic wear brand after a disappointing quarter earlier this month hammered the stock. U.S. stocks had the biggest daily drop in almost 2 years today as investors assess the impact of higher prices on earnings. Target, for example, plunged 24.9%, and prospects for monetary policy tightening on economic growth. S&P down 165 points, down 4%. The Dow down 1,164 points, down 3.6%. NASDAQ down 566, a drop of 4.7%. 10-year yield 2.88%. Spot gold up $1.42 the ounce to $18.16, up by about 0.1%. Bitcoin 29,124, down 3.2%. West Texas Intermediate crude dropped 3% today, 109.05 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, social media, it's incredibly important, not just to you, Katie Greifeld, who right now is probably looking at her Twitter. She is. Here's something that just happened.
I'm preparing for a segment.
She had to go and charge her phone, and it was tough for you to be away from it for like 20 minutes, right?
I was dry heaving. I hope you couldn't hear that on air, but I was pretty nervous.
Okay, well, it's okay. It's your birthday, so we're going to cut you a little slack.
Thank you for getting that in there.
Social media, not just important to Katie, but also to brands. The social media management and analytics company Sprout Social has released its annual Sprout Social Index. They do this each year, and it's a survey of marketers and consumers to try to get an understanding of the current media market, the future media market. The company's been doing this for quite a while. This year, they surveyed more than 2,000 customers for these results. Jamie Gilpin is the Chief Marketing Officer of Sprout Social. She joins us via Zoom from Chicago. Jamie, how are you?
I'm doing great. Hi, Tim, and hi, Katie. Happy birthday.
Thank you so much, Jamie. I appreciate it.
It's good to have you with us, Jamie. Hey, big takeaways from this, because I'm wondering when it comes to social media, you know, consumers, we're really fickle, right? We move from platform to platform, and brands have to understand how to engage us on these platforms. What did you find this year that was different than the previous 8?
Yeah, we do move platform to platform, but we don't give up the old platforms. Like, we just keep adding. Katie, you'd hate to leave your phone. That's probably because you have literally thousands of apps that you're just going back and forth between Twitter and Facebook.
Really calling me out here, Jamie, but you're right.
She's also a big TikToker, Jamie. She's a big
we're gonna
TikToker.
get there. We're gonna get there.
Oh, I'm also a big TikToker. Can't wait to talk about it. And I'm not can't exactly say that I'm in the millennial generation either. So I love this report. First of all, this is probably my favorite day. Yesterday when we released it at Sprout, we've been doing this for 9 years. And what's really cool about it is we've seen these trends like ebb and flow, right? And what's powerful about this data is it's a juxtaposition between what brands say. So we ask brands, and then we also ask consumers. And then we put those two together to see, okay, what do we need to be thinking about both from a brand perspective, a marketing perspective, but really the overall company. And I will say, I'm going to add another big old platform to this story, because probably the biggest thing that stood out for me from this year's report is not just the interest, but the quick and outsized investment in new technologies, metaverse, AR, VR, like that really came to the forefront. And it probably, the trend for me is like really reminiscent of the early 2000s. Yes, I can go back that far as a marketer.
Did we even have the internet back then?
Oh, come on.
Just barely. Like, we were just coming out of AOL.
How dare you, Katie?
We did have the internet. But social was just like coming on the scene, right? Like, Facebook just opened up. You didn't have to have a .edu email anymore. MySpace, Friendster, right? And marketers were really slow to adopt it. But that is not the case with Metaverse. Like, we learned from that we are jumping in. 67% of marketers are planning to invest 25% of their budget in Metaverse activities in the next 12 months.
Does that mean we actually have a definition for what the Metaverse is?
The Metaverse is going to change. Just like we didn't have this, I believe the definition of social has also changed tremendously. Like it is going to change, but brands are trying to figure it out, right? Like we just had Fashion Week for the first time in the metaverse most recently, and we've got like QSRs like Chipotle playing around with different activations, and so we're going to see a lot here. But this is just the beginning, and I'm really proud of marketers and brands for jumping in a lot faster than we've seen in other times.
The metaverse is definitely one of my bat signals. I could spend an hour on it, but I do want to get to TikTok because it takes up so much of my day. I feel ancient when I'm on that platform. Sometimes I think about the video I'm watching and I say, is this a high schooler? Am I watching a high schooler right now? But it feels like that they've just really burst onto the scene. I mean, a few years ago, I definitely didn't even know what TikTok was. What do we know about that rise looking at this index?
Yeah, so I think this is, again, like brands exponentially investing in things like the metaverse, similar with TikTok. Like it is literally consumer behavior and consumer usage of TikTok has doubled in the last 2 years. You mentioned like you didn't know about it a couple years ago. We didn't really know about it before 2020. And in that time, it has become the #1 biggest platform for usage across.
Seems like we might have lost Jamie Gilpin. We're going to work to get her connection back. Katie, I'm going through the report here from Sprout Social, and one thing that I find so fascinating about this is one of the takeaways that they got was that the top platforms consumers and brands anticipate using the most over the next 12 months. These are the top 5, okay? Consumers anticipate using Facebook the most. 71% of respondents said that. Then YouTube, then Instagram, then TikTok, then Snapchat. So 2 of the top 5 that consumers end up using the most or think they're going to use the most in the next 12 months, those are owned by Meta Platforms, a company whose shares have just been absolutely beat up as it tries to transition to the metaverse.
Interesting to see Facebook in the top spot there. I mean, I wouldn't have expected to see them. I just think my own personal usage, I really don't. I opened it today because it's my birthday. But
let's get back to Jamie Gilpin, the CMO at Sprout Social, who joins us from Chicago. Jamie, I don't know if you could hear me say that, but I was pretty surprised to see one of the takeaways that 2 of the 5 platforms, and in fact, just number 1 and number 3, Facebook and Instagram. How do you reconcile that with the way that Meta Platform, parent company of Facebook stock, has just been getting beat up?
Oh, you can spend a day on metaverse. I can spend a day on the stock market right now, especially with tech stocks. We are also a tech stock. And so I think user behavior, like how the platforms are being used is literally no indication on stock price right now. There's lots of other things that go into that. But if we just stick on behavior, which is what I'm more passionate about, of consumers, this kind of lends to the comment I made before, like we don't leave the platforms that we started on. So consumers that started on Facebook or Twitter or Instagram or LinkedIn, right? Like, or YouTube, we're still on those. Those are still on our phone. We're still going to those on a daily basis, but we're also adding now TikTok and now the metaverse. And so it's really about like the compounding usage, not just that we're leaving those platforms altogether.
And Jamie, in the last 30 seconds we have with you, what was the biggest surprise for you in this report?
You know, it's not necessarily a surprise, but probably more of a takeaway for brands. We know this, like consumers, whether it's generational differences or not, like we want authenticity, we want uncurated, we want real off-the-cuff type of content from each other, but we also want it from brands. And so TikTok, I think, is like the perfect example of a platform that made use of this just natural trends that consumer was actually driving, where we don't want the curated content, right? And so how do brands really get comfortable in that type of environment where they're not super produced, right? We're just being real. And so I think
that's the name of a new social platform too. Be Real. We can't forget about that one. Jamie Gilpin, Chief Marketing Officer at Sprout Social, joining us via Zoom from Chicago. That is going to do it for this Wednesday edition of Bloomberg Business Week. For the entire Bloomberg Business Week team, I'm Tim Stenovec, signing off for Katie Greifeld as well.